from Secret, the channel for learning about trading and investing. Welcome to Quick Market Analysis for tomorrow, April 19th, Wednesday, 2023. Basically, we'll be looking at what happened in the market during the day, learn from it, and then try to make a better trade plan for the next day. Let's get into the charts. Here we have the Nifty charts. Another bearish day. I slipped into the sideways, and that's it. And Banknifty, another red day, red candle, because it moved up and then it retrieved. So it's more of consolidation, and inside bar kind of candle is seen there, but red bar for sure. But managed to close positive with flattish 2 points up. And Nifty momentum is intact in the Banknifty. So Banknifty is much stronger. Nifty seems to be weaker comparatively as it has slipped down slightly from the bullish zones. Let's just summarize what's in favor of the bears bulls thing. So basically we fell down nearly 1%, 0.82% and 0.9% in the indices respectively from the day's high, after trying to move up. So initially in the beginning of the market tried to move up, and then it could not hold on to the selling pressure, and then it fell down from the top nearly 1%, and it could retrieve only 0.3% off in both the indices. So finally, at the end of the day, it closed absolute flat on the Bank Nifty and more or less flattish, 0.25% down, 50 points lost in the Nifty. Regardless, it's a red day, but very small pullback and then quick recovery. So remember, we have been retracing until recently. 3 weeks back, it was 11 to 12% of correction that was happening, and we had 4 months of red candles, and then now reversal rally, relief rally, whatever they call it, of 6 to 9% has happened, and we are there. It has taken a pause after a continuous up move in the Nifty, and it is all of a sudden slipped slightly in the bullish, into the sideways zone from the bull zone for the short term. FI selling had been aggressive since last 2 years, and March entirely it was selling, and April there were 9 good days which dropped yesterday, and today also it is selling of 810 calls. US market is showing some green, but it's still in a conditional zone. On the top of it is ending wedge. Crude oil is spiking. It is not. It seems like it may be going to the top of the wedge, 90 plus levels, but from the 65 levels that we had a few weeks back, is suddenly above 80. So that spike is not good for an oil importing country like ours. But rupee also has cooled off pretty, but it's not ready to cool off much as per what the dollar is cooling off. It's still very close to the 82. After resisted short turned and features by short build-ups last 2 days, today. Today it's both indices a short build-up, and we have an expiry that's happening 2 days before, and then the PCR is suddenly dropped to 0.62, which is close to the bearish in the case. Nifty Bank is still having almost bullish momentum, but Nifty is showing clear difference in divergence, basically, right? One is up and one is down. So that's about the bears. So we cannot say who dominates at this point in time, because it was a rally, it is a pause. So what's in favor of the bulls? Banknifty is showing strength several ways. It has managed to close 2 points or 3 points up, right? Despite the 1% of downfall that happened, quick recovery has happened, and Nifty is at a place where there is a change in priority bounce, where the previous support can act as previous resistance zone from the top court can act as a support now, and then it can just take on support near this moving average level of 600, and then its change in priority bounce from here cannot be ruled out. So in favor of the bulls, and 17,600 is maintained all that we preached it today. Yesterday we preached, but we didn't go that far. Before that, we managed to retrieve, but not too as much as how it happened yesterday. 7,600 was sold and 42,000 was in comfortably held in the Banknifty also. So the moment in the Banknifty is still intact, absolutely nothing has happened, still in the bull zones, although Nifty is flipped. Trend indicator radius, both indices are still bullish. Moving averages, systems are all history, they're still much above that 20, 50, 100, 200. All expensive moving averages are much below. Bollinger Bands is still not into contraction. They're still in expansion mode, although we have to read this. It's still having the price greater than medium and it's still very close to the bands. And it's an expansion that's shown in the daily charts. In the weeks, despite all this, it is cool off today. It actually have spiked up. In the market yesterday, it spiked up when the market was slightly up. No. Yeah, yesterday it spiked up slightly, not too much, just 3% of a spike up only happened and it remained close to 2.5. Today is actually cooled off. It should have spiked actually, right? Because right market had shown some additional red, but actually it cooled off. So I don't know what it indicates, but overall the sentiments are cooled off is a good thing. Right, the fear and greed is lower value is good things and lower leveraging is good thing. And the index still remain in the bearish, but it did not fall further down today. It was an attempt to move up, didn't do much of a move, 0.5% up was happened. But overall, if you see apart keeping away the ID sector, the FMCG, pharma, reality, auto, metal, all of them, even the metal is climbing the bullish zones. All of them in the bullish zones today. It's very positive. So nothing has happened across the sector. Carnage has not happened yet. So it's still, it's just a pullback or a pause in a rally is what we could make out from the charts and the other indicators like this, right? Index heavyweights that constitute to the most of the Nifty indexes, most of them are bullish, except the IT stocks which got hit badly following the Nifty results. Nifty TCS is bad, but Reliance still maintaining the sideways, although it's little hesitant to climb into the bullish zones, right? So these indices are also doing an attempt to break out of that condition zone. It's positive. Its momentum is bullish still, right? So the crucial resistance zone, it's having been there. The crucial zone can be looked at as a bullish way as well as a bearish way. There is a possibility that it can break on from here. There's also a probability that it can take the resistance and then reverse from here down to the bottom. It is in a hedge. So these are the things in favor of the bulls. So all is not done yet. We'll still have a good hold. Right, so let's just wrap up. So we continue to take a pause. Second day out, in a non-stop rally of 9 days. But 69% of the recovery had happened after a correction of 12.5%. Although momentum has dipped a bit, the trend remains intact in the short term, and we could probably be heading to further rally after this consolidation or this small retracement pullback is over. It's less likely that as of now, as of today, it's less likely. It does not show, the charts does not show that it's likely to move further down to the bottom and make new lower low. That's not, doesn't seems to be a likely thing to happen as per the charts today. Bollinger Bands is still in the expansion mode, which is still in the lower regime of 12. Fyers are not selling too much. It's small selling that's happening. It's only 2 days since they have been doing. And there was 9 days of buying that happened prior to that. It's positive. Used as a green, all of the signals. That gives the signals of a potential move. As long as the 17,500 and the 41,500 the Banknifty is held. It's a truncated view that's happening. The big spike is after 2 days on Thursday and Friday is a holiday. So the view remains mild bullish as long as the 17,500 and 41,500 is held. Banknifty seems to be very strong, and then of course there will be resistance much now towards the 17,800 and 18,000. There will be a lot of resistance, and up there till 18,300 will be full of resistances for sure. It's not going to be an easy thing, but the direction remains to be up on the upside, as per the charts that you see today. Probably it's a small pause of consideration before it takes its next. The view remains the same, mild bullish, and Medium term, the levels of first are 18,000 and 18,150. After Banknifty is 43,030, 43,600. Right. It's a mistake, not corrected. 43. That's another downside. 16,650, 16,750, 38,600, 37,400 is our support swing levels. Okay, we will look at. So that's the medium term, not for tomorrow. Tomorrow's levels we already seen here. Alright, markets could take support at this zone, and the heavy bounce could happen. That's a good support. Market could end this and then further move up or consolidate some more at the same zones of 600, 500. So as long as 16,500 is not breached, we should be okay. Maybe just consolidating to gain enough energy to make the bounce up. So levels are marked here clearly. So that's it. Hope this helped you to frame and get some clarity on what to expect from tomorrow. So if it helped you in some way, consider the like button. If you're not subscribed, subscribe. And do share it with others. We have very, very few sources to appreciate help in this. Thanks for watching. Happy trading, happy learning, happy investing. Bye-bye.